This week, the AI boom sent its first real invoice, $700 billion committed to building it, 150,000 tech jobs cut, and some of the biggest names in the market down more than 20%. In 1 week, the story flipped from how much AI can do to who is going to pay for it. Here is what these headlines mean for your money. Quickly, the disclaimer: I am not a financial advisor. This is education only, not investment advice, and not a recommendation to buy or sell anything. Investing carries risk, including the loss of your capital. Past performance never guarantees future results, and I may hold some of the assets discussed. Always do your own research. Welcome back to the channel where we go deep. No hype, no doom. Today we take four AI headlines and ask the only question that matters for an investor. So what? Let us follow the money. Start with the bill. This year, the biggest tech companies are on track to spend more than $700 billion building artificial intelligence. It is the largest corporate bet in history in a single year, and the first cost already showed up in payrolls. Roughly 154,000 tech jobs have been cut this year, up about two-thirds, with AI the most cited reason. A lot of that is companies funding their AI spending by trimming everything else. The clearest example is Microsoft. On the 6th, it cut around 4,800 jobs, with Xbox hit hardest, even as its own profits hit records. Because here is the paradox. As a business, Microsoft is thriving, net income up 23%, its cloud and AI arms booming. But the stock fell 23% in the first half, wiping out about $1.2 trillion in value in 9 months. A healthy business and a sick stock at the same time. Why the disconnect? Because the market stopped being impressed by AI and started demanding it pays. Hundreds of billions are going out the door. The returns are still a promise. But here is the other side, and it matters. There are growing reports that employers who cut staff citing AI already regret it. The productivity gains were oversold, and experience walked out the door. Some of these layoffs may be a story for investors, not a real efficiency. Hold both ideas at once. The second story is quieter, but it may reshape the entire internet economy. On July 1st, bots passed humans online for the first time, about 57% of all web traffic. That breaks the deal the web has run on for 30 years. Crawlers take your content and send you visitors back. AI shattered it. Look at the pages each one takes for every visitor it returns. Google about 14 to 1, OpenAI 1700 to 1, Anthropic 73,000 to 1. AI takes almost everything and sends almost nobody back. So the infrastructure is fighting back. Cloudflare, ticker NET, sits in front of about a fifth of the web, and it flipped the model. It now charges AI not each time it grabs a page, but each time your content is actually used to answer someone, settled in digital dollars, and it blocks training bots on ad pages by default. A whole new data economy is forming. The winners own the rails or premium content others must pay for. The squeezed live on free scraping and advertising alone. The third story adds a brand new variable: markets are only starting to price government. In just 18 days, a frontier model rode a roller coaster. Anthropic's Fable 5 launched on June 9th, was hit with US export controls on the 12th, freed on the 30th, and came back on July 1st with new safeguards. Why restrict your own best technology? Because Chinese open models are catching up fast, nearly as capable and far cheaper. The fear is that locking American models down simply hands rivals the time they need. Control it too tightly at home, and you may lose it abroad. For investors, the precedent is the real story. A government can now switch a product off. A June order asks AI labs to submit their models for review, and another major lab is staggering its next release under similar pressure. The open question is whether every frontier launch will soon need a permission slip. Policy just became a variable that can move these stocks as much as earnings can. And it reaches all the way into what we watch. Netflix just used AI to recreate the voice of Gene Wilder, the original Willy Wonka, who died in 2016, for a new show with his estate's permission through a marketplace already licensing famous voices. A performance is becoming something you can license, reuse, and scale long after the performer is gone. The opportunity is cheaper production and new royalties. The friction is a creative backlash and regulation that is coming. Pull it together, and it is one story. A giant AI build out is finally colliding with the demand for returns. The web is scrambling to charge for the content that feeds it. Governments are stepping in as gatekeepers. And even Hollywood's raw materials are being rewritten by software. The thread through all of it is the same: who pays and who profits. So here are both cases, honestly. The bull case: today's spending builds the most valuable infrastructure of the decade. The toll collectors and chip makers win big, and the leaders take a lead that lasts a generation. The bear case: 700 billion meets a wall. The layoffs reverse, sky-high valuations reset, regulation slows everything, and the crowded AI trade unwinds fast. Both futures are live right now, which is exactly why this moment matters. So, what do you actually watch from here? At the mega caps, spending versus revenue, is AI finally earning? Do the jobs cut for AI quietly come back? Does paying for content actually catch on? How far does model gating go? And where do chip and memory prices head? Track those five, and you will see the story turn before the headlines do. Here is the takeaway. This week did not end the AI boom, it matured it. We are leaving the phase where anything with AI in the name goes up and entering the phase where it has to prove it pays. That is not bad news, it is healthy. It is how the market separates real value from a good story. None of this is a recommendation, just a clearer lens so you can make your own call. And if this made the noise a little quieter and the picture a little clearer, do me one small favor. Tap like. It genuinely helps more investors find this. Share it with the one friend who thinks AI is either pure magic or pure hype. And subscribe so we can keep going deep together every week. We do the digging so you do not have to guess. See you in the next one.